YouTube family, hope you guys are good. Now, the markets are bleeding out to start the month for April, okay? A lot of people are probably thinking what the reasons are for that. Today, I'm going to bring you a video of what has been going on. A lot of people have been hearing about Donald Trump making comments, also imposing some tariffs and stuff like that. So we want to kind of speak on what the implications are, why the markets are reacting like this, and also how we're able to potentially position ourselves for the future and actually start building our own wealth, okay? Because a lot of people don't understand that when it comes to building real wealth, it's built when the markets are heading lower. It's about positioning yourself at a discount. The money isn't made when the market is rising, it's made when it's falling, okay? So wealth is a transfer from the impatient to the patient. So I've been praying for times like this. I thought it would come a lot sooner than it did, especially after like inflation hit and we had all that money printed. When we had the central bank start printing all that money, it didn't make sense how the stock market was just continuing to rise. I think it was a little bit baffling to me, especially because I thought with everything that's going on, we was getting rising inflation, we was getting interest rates being driven up. It didn't make sense how the stock market was just continuing to print money, like, and actually give us a real percentage return. So that was a little bit baffling to me. So seeing the markets do what it done, it's overdue in my opinion. It's very, very overdue. So I'm actually excited for this period to come, because again, it's about positioning yourself in prices that make sense for the next leg up and the next expansion. Now, when you get downturns like this, it's very critical to understand that this is normal market price action, right? For those that read the charts properly, it's very, very normal behavior. But secondary to that is the fact that when you actually look at what the Nasdaq has been doing, if you look at what the Dow Jones has been doing, the S&P 500, when it comes to actually positioning yourself, you have been hearing from people online, they'll say, you know, buy at this price and buy at that price, or reacting off of fundamental news or earnings reports. But no one has factored in that people like Warren Buffett have been sitting on the sidelines with 300 billion plus in cash reserve. Now that sparked my alert sign in my head to say that something's wrong, because Warren Buffett is not about missing out on profit if he doesn't know something about the market, right? You don't sit on such a big cash reserve if you don't conclude and say to yourself that something's going on behind the scenes that is going to happen, right? So that was a year ago when we found out he was selling all of his stock, like Apple stocks and all of these other ones, right? And then it's like, okay, but he's yet to reposition himself. So if he's able to sit on the sidelines for over a year, then we have to exercise and think about why that is, and also what are we missing if we're just going to continue to buy whilst things are going well. Because a lot of people was like, yeah, Nvidia, keep buying Nvidia. A lot of people was like, buy Microsoft. A lot of people was like, buy Tesla. All of these stocks since Donald Trump got into the office have actually been on a downturn, right? But a lot of people are panicking because they bought in at the highs, which is stupid. You should never be going off of the euphoria of, yeah, Trump's in office, Elon's neck in his corner, he's being backed by the president, all of that. It's just about positioning yourself in price action that actually makes sense. So obviously what I teach as well, in terms of just how I teach people to look at the market, you should know the difference between a premium and a discount. You should know when you're buying at a premium, right? You should know when you're selling at a discount. So it's all of these things where human psychology comes into it. A lot of people get caught up in reacting off of what the market is doing. Think about it, right? And I understand it. It's not that I don't, because if someone wanted to get you to understand how you should be thinking about things, right? Always think about yourself. If you was a wealthy individual, if you actually had money in the market, right? And let's say your portfolio is worth 5 mil. Let's say it's worth 5 million, right? If you bought in at the time and then you're seeing it go from 5 million and now it's worth 2.5, 2 million, you know, you're going to be panicking a little bit. Like, let's be honest, no one wants to see their money dwindle. But at the same time, as long as you don't sell, you're not actually losing your money. You're not losing the shares. All of that is just worth less, but it doesn't mean it can't recover. So when it comes to the stock market itself, I've been waiting for an opportunity like this because I've been looking to build my actual stock portfolio for a long time now, because I've been putting it off. I've just been kind of focused on different asset classes. I haven't really had a stock portfolio to build, but I do think that with it being at such a discount, some of the blue chip stocks especially, you want to actually accumulate as much as that as you can. So I am not really one for having too many different stocks, or like penny stocks, or all of those things. I don't know enough about them. I just feel like if you want to actually make real returns, you should just kind of stick to the big guys, the ones that are going to pay you a dividend at each quarter and all of those ones, right? And the ones that are actually, they have the business model and the product to actually understand why the stock is going up over and over each earnings report and stuff like that. So blue chip stocks, guys, I'm excited for this because, again, I've been waiting for especially the tech sector to come down, because I like some of these stocks. It's just that when they was rising, it's like, okay, I'm not going to buy at these prices, and then you end up having to wait quite a while and you feel like you're missing out, and you feel like, damn, maybe I should have bought it. It's gone from $50 to $110 or whatever. And I've always been in the understanding of, again, thinking about Warren Buffett sitting on the sidelines, thinking about what's it called, JP Morgan CEO Jamie Dimon, he's cashing out some of his stock. So when you see some of these guys, right, in terms of just doing less, that's an alarm bell. Like, these guys are not, they're veterans in the game, so they know when to go hard and actually start to accumulate and when to not accumulate. So where these guys have been sitting on these cash reserves, cashing out, there was that time period where a lot of CEOs, they were actually resigning or leaving their posts, and it was like, raw, a lot of changes are happening. And yes, the market's still rising, but we never got that retracement. I feel like this is that retracement that we've been waiting for. So I feel like there's still a little bit of areas to go. So if we just look at the NASDAQ here, this is an area I'm interested in, which is, no one would have thought that it would get to this low, below 16,000. No one would have been saying that, but I think it will get below 16,000. We might get a little bit of a pullback and a recovery because it has been selling off. And all of this is due to the fact that Trump has come out with some tariffs. Now, it's not only just that, right? It's just what he's kind of done in terms of not allowing America to be taken advantage of. Fair play to him. Like, he's got his reasons. He's kind of looked at who's been doing what, and America's losing out. So he's exercised his right to, as president, to say, look, we're not going to do that no more. And in the long run, he sees the result of these tariffs saving money in certain areas and also getting rid of some of the global debt, especially in America as well. And also kind of doing, it can create a trade war, like tit for tat, that we might see responses to these tariffs, which we most likely will. But at the same time, he's remained adamant that the long-term picture is going to be good for the US economy. So he's got his reasons for that. Now, why the market has reacted so heavy is because if there is that ongoing uncertainty where we've still seen other things not resolved, okay, as in what's happening in the Middle East, the geopolitical tension there, the Russia-Ukraine thing is still not resolved. And then when you pair that with potential trade wars, right, where certain economies, big economies as well, don't really want to do business with one another, that sparks more uncertainty in the market. So the stock market has reacted very, very heavily. And oil, for those that follow me, I trade oil, and it has done a crazy sell-off. Now, the reason I want to kind of bring attention to that is because when it comes to stuff like oil, the reason it drops, like, and what people don't understand is, and I have to kind of think about it on a deeper level as well, because I used to think, okay, oil's a commodity. If a trade war breaks out, well, like, what am I missing? Like, why is the fear of a trade war breaking out bringing oil down so much? And that's obviously because it could spark less of a demand, basically. So if there's less of a global demand for oil because less trade is happening, the price of oil has to go down, and which it did. And that sell-off last week was insane. Okay, I had an area marked for it. I did send it out to my Telegram. And when Trump actually brought the tariff news out of what he was going to do, the market reacted to that during the evening. So I don't necessarily trade or go off of the fact of, Trump said this and then the market is kind of pushed back. I come to it the next morning and then I'm going to look for my entries then. And as you can see, just by looking at this chart, guys, it was literally Trump spoke. We got into the next morning, right? 2 o'clock, you see a slight pullback. I'm not awake at that time. And then going into pre-London session, it continued to slide. All of these areas, none of them got retested. As you can see, they always just left. None of them got retested, okay? So I'm not going to FOMO in and start jumping in the market and being like, damn, I need to be a part of that move. This was all based off of the news happening, right? There's nothing that I could have done in order to capture this according to my criteria. And that's the most important thing. As long as I'm having my criteria met, then yeah, potentially we have a trade on the cards, but we didn't. So with oil sliding the way it did, trust me, it caught me by surprise. I didn't expect it to flood like it did, right? And it was due to the fact that where there was trade uncertainty and a potential trade war, it could spark a recession fear as well, excuse me. So with recession fear being on the cards as well, because again, if the economy slows down due to less trade happening, that's a natural occurrence of trade slowing down. You have to understand, right, that the things that are going to be affected are GDP, and if the GDP is affected, then you're going to see potential recession fears, right? Which is what we're seeing in the market. So couple that with other economies, right, that are also trying to hit back at the US in terms of, if you think about what Canada did, Mexico had some retaliation as well, and obviously China, they done the biggest tariffs in terms of just, you know, trying to get back at what the US are doing. All of this just breeds uncertainty, right? No one really knows what the next step is. So when that occurs, you're gonna get these days in the market. So how do you take control and gain advantage of when the market is having down days and when there's so much uncertainty? That's when you got to start thinking and sharpening your brain and looking at some of these assets as real investment, right? So you've got stocks, okay, like I said, blue chip stocks. You're going to have the crypto markets. You're going to have commodities like the precious metals, gold, silver. Everyone thinks gold, buy gold. You could buy silver too. Silver is just as important as gold. A lot of people don't realize that, but these are things that you can physically own. Platinum as well, that are going to gain value if a recession does hit and the uncertainty continues. Now, one thing for sure, I don't think everyone wants to spark a full-out trade war. I do think they do want to do business. I do think economies and leaders of the economies are going to get together to try and hash this out. It's just how long is that going to take, right? But the main thing is, guys, as long as these markets are down, it's not about withering away or being scared. This is the opportunity that you really want. This is the time to capitalize, truthfully. I thought this would happen a year and a bit ago, and it didn't, right? Because again, according to what I'm thinking about with the stock market especially, I thought that this would happen a long time ago, but it didn't. So where this is being held up, and obviously everything's kind of news reactionary right now, the technicals play a part too, right? If you're able to position yourself due to having the understanding of what makes sense, where it makes sense to buy, where it makes sense to sell, these are the times that you live for as a trader, because this is where the money is made. Truthfully speaking, this is where the money is made. So guys, recently I've been working on something for you all, okay? It's something which is free. I want you guys to stick around to the end of this video. I'm going to show you how you can get my free training and capitalize on some of these trades, okay? Because I know for you guys, I've been tapping in regularly. I've been seeing my subscribers go up, so I want to give back. But wait until the end of this video, I got you, okay? So when it comes to actually understanding the charts and seeing what it is we can do to capitalize, right? When the Trump tariffs came out, if you look at what is happening on this chart here, we can see the market had risen. That temporarily forced the dollar down. Now, what that did, guys, is push the market to this daily area of interest. Okay, that's literally it. Those that are in my Telegram, I was showing guys that we was inside this range. As you can see, if we draw a box on it, you understand that this is all a range. So we drove to the upside of the range first. And those that have been in my Telegram long enough know that if you go one way first, the likeliness of you leaving the other part of the range is not that high at all. So we was able to actually catch some shorts on the Friday of last week. Now, you don't need to be the first in the trade. Like, you don't need to catch the top. This was my original area on where Trump was speaking. Going into that Wednesday, we placed up here, started coming down, and then going into that Friday, we continued down lower. Now, it wasn't until Friday afternoon, okay, which we was able to actually capture our entry on this trade. Now, the main thing for this is the simple fact that we already had the narrative of where we was trying to get to based off of the range being broken to the upside. Once it was broken to the upside, we now saw why we would want to come down. So playing into this, going into that Friday afternoon, I knew that we was likely to go for these lows. So I did decrease my risk on this trade only because of the heightened trade war, like the uncertainty and whatnot. So I didn't, cash out what I'm normally accustomed to doing with this trade idea. But nonetheless, in terms of the idea itself, it remained the same. Now, those that are in my Telegram group, and obviously my private one-to-ones as well, they understand the concepts that I've been showing them and how we're able to actually gain these entries. So it's just about knowing what you're in the market for, and it should be an easy read. If the market's not an easy read, then you don't have a trade on your hands. It's really that simple, guys. So I've always been a part of the mindset of make trading as easy as it needs to be. Okay, it doesn't need to be tough. It shouldn't be tough in the first place, because you have to overcome so much from a psychological barrier perspective, as well as then refining and sharpening your skills. You want to get it to the point where it's just, I'm in it for what I want to see, and that is it. If you don't see what you want to see from an entry perspective, then you're running the risk of gambling, guys, and we're not in the business of that. So, you know, hopefully we're at the start of the week now. We start to see some things actually get a little bit more positive. If they do bleed out a little bit more, it is what it is. I think we are getting into areas where we can position ourselves, especially with the stock market and things and such. We might have a pullback today. We have got the the stock market open right now, so they'll be eager to see what occurs going into today's session. It has had a little bit of a bounce, which is great and normal. It goes to show you people are taking advantage of the fact that we are at discount level. To wrap this video up, guys, like I said, if you want access to my free training, please click the link in my bio. And again, everything is totally free. I'm not trying to sell you nothing. All I ask for in return is your email address so that I can give you ongoing free game via my email, via the newsletters that I've got coming out on a week-to-week basis. Okay, so if you found this video useful and you understand what is going on within the trade wars and how we could potentially be looking to capitalize off of where we are at in the markets now, you don't want to miss this opportunity, guys. At the end of the day, this is about protecting yourself and positioning yourself for the future, so that you're not in the same place as last year and the year afterwards as well, because this could be a 1 year play, a 2 year play, a 3 year play, but you're not going to see these prices again. I guarantee you that. So it's about making sure you understand that and being a part of it. I know everyone's at a different part of what they're able to invest, but the bottom line is you have to invest what you need to invest in the market as and when you can, because when you are at discounts like this, if you like the market when it's going up, you should like it when it's at a discount. So hopefully you found this video useful, guys. Please like and subscribe to my channel. Thank you all for joining me on this journey as well. I do see my followers going up, and I appreciate each and every one of you for tapping in. So I'll see you guys on the next one, and just remember, man, to be safe out there when trading in these conditions. Thank you for watching the latest episode. If you like that, please like and subscribe to my YouTube channel for more content. I'll see you on the next video.